Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Israel open to temporary truce to free remaining hostages, as well as that bond fund giant Pimco warns of hard landing for UK economy. We've got lots to talk about in the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. But before we get straight into it, make sure you subscribe. But the first article to talk about, of course, is Israel. Now, Israel's President Herzog has said Israel is open to a new temporary truce with Hamas. Now, this comes in a new effort to secure the release of hostages held by Hamas and others. Now, we've been covering this conflict greatly. We've been covering it since the start of the very war. Now, this obviously did begin, this military campaign into Gaza obviously did begin following the October the 7th massacre, with Hamas massacring over 1,000 Israeli civilians and taking many hostages in the 200s. And this is what we've now seen as a result, is this kind of battle for those hostages, with the ground offensive being more so a process or with the goal to eradicate Hamas from its leadership within Gaza, whereas there's greater calls that we're seeing now in Israel against the military campaign, and more so just calls for kind of a temporary truce and an exchange of these Israeli civilians for Palestinian prisoners. But of course, certain members of the Israeli cabinet do not want this, as they don't want to negotiate with Hamas. They even criticized Netanyahu for the last truce that was implemented in the last period of negotiations, which did take place, where we did then see many Israeli women and children being released from Hamas kind of captivity. But this comes as a new effort following some new developments within the war against Hamas. Now, these comments obviously come as Qatar brokered new talks over a deal to free the captives. The increased calls for a truce followed an incident involving the IDF mistakenly shooting and killing 3 Israeli citizens who were being held hostage in Gaza, by Hamas. And this is what we covered yesterday, was the 3 civilians that were sadly killed by IDF soldiers within Gaza, as they did come from Hamas's captivity. So they were kind of within the Hamas controlled area within Gaza, and when they were seen by IDF soldiers, they were sadly killed. Now, it is reported that these individuals were topless, as well as waving one homemade white flag. So this kind of adds to the sadness around the issue, is the kind of, and which is largely why we're seeing these this uproar and this increased call for a temporary truce, is to avoid any unnecessary killings of Israeli hostages, which may take place as this ground invasion does continue. And so this is what we're really hearing. Now, yesterday we did cover, or I believe the day before, we did cover how over 100 of the relatives of those still held hostage in Gaza did come out and rally for this temporary truce, and it does seem that Israel is now conceding to that. The question is, however, how long will this be able to last, and for what price will Israel be willing to pay? As we do know that last time many Israeli women were exchanged for basically what was 3 times the number of Israeli women and children for 3 times as many Palestinian prisoners. So for every 1 Israeli woman, let's say, it was kind of 3 Palestinian prisoners. And this creates a bigger situation and issue for Israel, as the hostages that are primarily being held now by Hamas are individuals which are ex-IDF or kind of current service IDF males, and therefore Israel may have to pay a more expensive price, which we'll actually get into what that price is, but it is far more than what we previously saw with those Israeli women and children. Now, calls have also grown as the death toll in Gaza has reportedly reached over 19,000 dead. Now, Israel's spy chief held talks with Qatari Prime Minister and CIA boss on Monday, as this was the first time these groups convened for discussions around a temporary truce since the last truce, which did break down obviously after a week. Now, in the last truce, 86 Israeli women and children were traded for 240 Palestinian prisoners. So there you go. That's the actual figure. But obviously, over 240 were originally taken hostage. So this still, this notes and kind of makes it more clear how many hostages are still held within Gaza, despite having these initial trades between Hamas and Israel, as only 86 have currently been traded for, and many Israeli men will be still held in Gaza for a very long time, it does seem. Now, this truce did last a week before breaking down, with 24 foreigners being released as a result, and these individuals were primarily Thai, and they were working on the farms nearby Gaza when they were initially taken hostage. Whilst Hamas is seeking a truce, they want 10,000 Palestinian prisoners for the 129 hostages still held by Hamas, with these individuals being mostly IDF soldiers. So here, and you are really able to see the real issue which is facing Israel in engaging in these hostage talks, as ultimately Hamas wants more Palestinian prisoners than previously seen for an Israeli soldier, as they bear more weight to Hamas, and therefore it does seem that Hamas is trying to extract as much value from the IDF as possible, causing the deal to be very costly for Israel, despite the civilians that may be held by Hamas. An Israeli official briefed on the talks said the country would continue its military campaign until the negotiations were successful, with a weaker Hamas being easier to negotiate with, and that's according to Netanyahu. So that's kind of the message which Netanyahu is trying to put out here, is that if we destroy Hamas's leadership, if we destroy their ground forces, if we take out their military offices, and ultimately it's going to be a lot easier to bargain with them, because they have less to kind of say, we can hold on to these individuals, we can prevent them from you being able to capture them, and therefore it does make an easier situation for Israel to deal with, according to Netanyahu. Despite that, Hamas believes it can extract a high price for Israeli soldiers, with Hamas in the past receiving 1,100 Palestinians for one single IDF soldier, and that was during 2006, so quite some time ago. But there we can really start to see how many Palestinians Hamas may call for those Israeli soldiers. That's all to talk about in this article. Keep your eyes on it, as it will be adding to world tensions. Next to talk about, though, is bond fund giant Pimco. Now, one of the world's biggest fund managers warned the UK was at risk of a serious economic downturn next year. Now, a chief investment officer at Pimco said he was running larger than usual bets on UK bonds in comparison to US bonds, expecting the UK will suffer greater economic strain. Now, we've been kind of discussing the economic situations within the ECB, within the Eurozone, Great Britain and the US, of course, with all of these nations kind of, well, not so much nations for the Eurozone, but these regions, I guess you could call it, or economic regions, being powered by their central banks, with those being the ECB, the Bank of England, and the Fed. Now, ultimately, what we've been mainly talking about is how these different central banks have been shaping their monetary policy, with the Fed most recently coming out with that more dovish rhetoric than we were previously expecting, with the Bank of England most recently in its latest interest rate meeting actually coming out with a more hawkish position. And so these kind of differences in the kind of rhetoric that we're hearing is shaping up as well as a better way to understand those respective economies, or at least expect how those economies will react. And here we're actually seeing this in practice with the bond giant Pimco kind of warning of that hard landing for the UK economy as a result of having that more hawkish position monetary policy wise. Now, the UK economy surprisingly contracted in October by 0.3%, with the Bank of England trimming its quarter four economic forecast back down to a flat level when it was previously at 0.1%. So there we're starting to see, even though we haven't actually seen the Bank of England hold rates into next year, midway next year, we are already starting to see those effects of high interest rates. And that's something that's definitely important to note when we do compare that to the US, which was being, kind of referenced as the kind of, the bright spot within the global economy. So very different economic pictures between these two different nations. Now, the UK bond yields have fallen sharply since October, with the 10-year yield dropping by a whole 1% percentage points. This market action being driven by bets of faster rate cuts next year in the USA, and with the USA's monetary policy being so kind of leading in its influence and the way it affects global markets, we do generally see this kind of reflected over onto other markets like the UK bond market. Now, a weaker UK economy, however, would pull yields down further typically, with the ECB also revising down its growth expectations, bringing 2023 GDP growth to 0.6%. High interest rates tend to hurt European economies more than the US due to mortgage contract differences as well. Now, the downbeat outlooks for the UK and Eurozone economies are in stark contrast to the US, where growth has remained strong. Now, the broad consensus among investors is that the Fed will deliver a soft landing. So that's something that's very important to note, is this idea now that among investors, it's believed that the Fed will deliver a soft landing, achieving that low inflation rate without hurting the economy. Whereas it does seem that the UK's attempt at achieving low inflation will in fact cause a hard landing. So keep your eyes on this sort of topic, as it does relate to the markets greatly, obviously. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening, with the first asset, of course, being to talk about the US 30. Now, of course, most recently on Monday and last week even, we were talking about how the US 30 was kind of stalling out with this great consolidation period, which you can see here. Whilst it's not that large, I guess it is a consolidation nonetheless, and this followed obviously breaking above the highest high of the US 30. We did see this slowdown. This was kind of expected, but ultimately we were expecting a retracement. This is generally what we see, and we did notice on the RSI that we were experiencing a bearish divergence, and there we kind of really cemented that kind of expectation that we were going to see somewhat of a retracement, but despite that, we have just seen a continuation to the upside, as we can see here, with the US 30 continuing to push higher despite its bearish divergence, and despite making new highs. And after we usually break above those strong areas of resistance, we often at least see that retracement before we see a continuation higher, but we do not see that, and in fact we are now seeing that the US 30 is continuing to make new highs. So this is very important to note. Of course, this Fibonacci is now less relevant, but quite possibly we still may see a future retracement down to that 3820 level, possibly quite soon after we kind of reach a level which is suitable for a retracement on the US 30. But definitely keep your eyes on this, as it is in a very interesting position. Next to talk about, though, is the dollar. Now, obviously, we were talking about how the US was providing more dovish rhetoric now, or at least the Fed was providing more dovish rhetoric. And as a result, we did see those sell-offs in the market, as seen here. But ultimately, price did come up and retest this strong area of liquidity and come very much near this Fibonacci retracement level of 38.2. That said, we didn't manage to tap that level, so you weren't sure on the significance of this area. But ultimately, we have now seen a sell-off and a move to the downside most recently, as price does move away from that strong area of liquidity. What will be interesting to see, though, is whether we still maintain this liquidity, or at least momentum, to the downside, and therefore, gain the momentum to break even further and smash through this lowest low level on the dollar. This may be a hard thing for the dollar to achieve, of course, with this being such a significant level now for the dollar, with this lowest low not being seen all the way since August of this year. So quite possibly this still maintains a strong area of resistance, or at least support, but definitely keep your eyes on this, as it is a very interesting situation for the dollar. But staying on the topic of the dollar, next to talk about is Euro USD. Now ultimately, going back to the 13th of December, we had spoken about how this 78.60 level on the charts was going to act as a strong momentum to the upside. And in line with fundamental events, we have now seen Euro USD take a strong move to the upside in a very bullish manner. That said, price came into contact with this double top, as we have noted here, and did retrace away from that area. Retracements are expected, of course, and we did then see price come into contact with that 38.20 Fibonacci level and liquidity level just below it. From there, we've seen a strong move to the upside, which is very important to note, as it does reaffirm this kind of message that the overall momentum for Euro USD is one which is very bullish. And whilst we may look on the kind of more long-term, medium-term time frame, and it kind of looks more like we're seeing just ranging patterns on Euro USD, ultimately we were expecting somewhat of a retracement. So there is still a great chance that we do see price run all the way up until the minus 27.2 Fibonacci level, I guess. But just because we're ending off the year, we might not see the momentum to even break above this double top just yet. But going into next year, I think we definitely could have our eyes on reaching that minus 27.2. In the meantime, look out for this area of resistance, of course, as we do near it. As we do know, it's acted as a double top before, so there's always the chance of that being repeated. That's all to talk about on Euro USD. Next to talk about is pound yen, which, on the topic of double tops, has just formed a double top after moving away from a double bottom, as you can see down here. So obviously yen has been extremely volatile following certain comments from the Bank of Japan, and that's why we did see this kind of flash crash on pound yen. Ultimately, though, we were talking about how we wanted to see kind of price action evolve on pound yen before we made any, decisions or conclusions on where price could be moving. And we even expected that to take as long as till next year. But it does seem that price is really starting to settle down, interacting with these strong areas of support and resistance and forming key levels along the way. And if we just look at the charts, normally we can start to note these levels quite clearly. But ultimately, we need to be seeing this area respected greatly. We know that it's previously kind of been made a significant area as a result of the 50% Fibonacci level, but we did note the fact that because of the volatility, it might not respect it properly, but ultimately we are starting to see these levels now be respected. So definitely keep your eyes on pound yen as things are getting interesting. Next to talk about, though, is USD JPY, which has now just come into contact with the 61.80. Price did break above that 38.20 and liquidity level, which we did kind of expect price to interact with, but it did want to move higher. So it does seem that it's taken out a lot of these stops in this area where the market was kind of very open and clear, and has now come into contact with that 61.80 and is now moving down from that level. We should be waiting to see how price moves, though, but definitely keep your eyes on this. Next to talk about, though, is Bitcoin, which we did, reference yesterday, or might not have been yesterday, but the day before. We did comment on how Bitcoin was in an interesting level, ultimately because it was pushing higher, and now it's kind of moved into some lower levels. But ultimately, Bitcoin continues to range, and it kind of reminds me of previous price action that we did see before this overwhelming move to the upside, back around this level where price kept on ranging around, staying within these kind of liquidity zones before making a significant move to the upside. Definitely keep your eyes on Bitcoin. Even here's more so what I was talking about, where price had kind of moved higher and then started to range. Keep your eyes on Bitcoin. It is a very interesting asset, but also keep your eyes on talks in relation to the Fed, as the Fed is largely driving a lot of the moves that we are seeing on Bitcoin. But the more dovish rhetoric that we're now hearing from the Fed could drive Bitcoin higher. So keep your eyes on that. Next to talk about though is gold, which ultimately is ranging just like Bitcoin, kind of low volatility at the moment, following the dovish rhetoric last week from the Fed. But we are seeing just this range between these two key levels, around the 2020 level and 2045 level. Two key levels on gold. Just keep your eyes on this to see if any developments are made. But ultimately, we are ending off the year, so momentum will likely be low. That's all to talk about on the chart. So we've been talking for a while. Lastly to talk about, of course, is the economic calendar, which we'll get through quick. Now, firstly, we'll be getting German consumer confidence figure being released. Along with that, we're getting the British inflation rate figure, so that's a key one to listen out for. Along with that, we're getting Chinese FDI figure, so listen out for that, as well as the Swiss current account figure. And along with that, we're getting the US mortgage applications data. That's always an important one to listen out for. As well as that, we're getting Eurozone consumer confidence flash figure. So that will be interesting to hear, knowing the issues within the Eurozone economy. And finally, we'll be getting the US consumer confidence figure, of course. So lots of data coming out today. Hope you have a great trading day. But that's all from us at Wildwood Capital. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. But once again, that's all from us. Have a great trading day. See you later. Bye.